Tesla stock is down almost 4% today, and we'll go over exactly why that is and all of the breaking news that you need to know. First up, Tesla China has cut prices of the Model 3 by about 6%. This equates to about $2,200 US. So that's a big hit to margins. Tesla has also cut the price of the Model Y in China by up to 2.8%. This is the biggest negative news that we have today, but there's actually positive news as well for Tesla stock. Tesla is now officially offering the new $7,500 EV point of sale rebate in the US, enabling an estimated 250 million Americans to take advantage of this. To get a $7,500 discount directly off the purchase price of a Tesla, click yes you see below during the ordering process. Here you can see this is what you would click yes to. So this should stand to make Teslas more affordable to more Americans. These are the EVs made by Tesla that currently qualify: the Model 3 Performance, the Model X Long Range, the Model Y All-Wheel Drive, the Model Y Performance, and the Model Y Rear Wheel Drive. So this is good news for Tesla, and it's hopefully going to be good news for Tesla delivery volumes in 2024, but time will only tell. That's not an immediate good news kind of catalyst. Like, to the contrary, Tesla lowering prices immediately is a negative catalyst for Tesla stock. As you can also see with Tesla's cost to borrow fees at about 10% today, it's kind of a door opener for shorts to enter into short positions in Tesla. Because let's be honest here, China deliveries were fantastic in Q4. They were higher than US deliveries. If China's seeing price cuts, well, the US is probably about to see a price cut as well. So not only did we already see a price cut, but the odds of another price cut in the US look more likely. So now we have an overhang on Tesla stock that probably is not going away anytime soon. Everyone thought Tesla was done cutting prices. Indeed, that doesn't look like the case. It is also worth mentioning that over in China, you can only buy the Model 3 Highland, and that was raised about 12% as far as the pricing when it initially hit the markets. So you're still higher on the Model 3 than you were before, but now analysts have to reduce their EPS estimates for Tesla. Gary Black says China cut prices by 2 to 6%. We estimate this will cause Tesla analysts to cut 2024 adjusted earnings estimates by approximately $1 billion, or by about 25 to 30 cents per share. That means about $20 per share should get taken off from Tesla's stock. Here on the day today, Tesla stock is down about $9, so potentially there could be more downside to come. Tesla stock is now down over 4% at the time of recording this video. Gary Black says they will reduce their own 2024 adjusted EPS from $4.20 to $3.90. That's a reduction of about 7%. The worst part is these price cuts, they're not spurring demand. They're not helping Tesla sell more vehicles. It's really not doing anything but hurting margins. But let's get on with the rest of your Tesla stock news today. Tesla also announced last night that they have increased the price of the Model Y 7-seat option by $500, now to $3,000 in the US. Nissan today unveiled the performance version of its all-electric Area SUV called the Area Nismo. Short range, 66 kilowatt-hour battery, 362 horsepower, 4,500 pound weight, and it does have an artificial Formula E race car acceleration sound. No word on pricing, range, or US availability. UAW President Shawn Fain calls Tesla's pay raise for its factory workers the UAW bump. Porsche announced they delivered a total of 40,629 Taycan EVs in 2023, up 17% year over year. Elon Musk confirms that him and all employees of SpaceX passed random drug testing for years. NASA received all of those results. Polestar delivered 12,800 vehicles worldwide in Q4 2023, down 39% year over year. Barclays has shifted their first Fed rate cut forecast to March from June. Currently, markets are pricing in a 73.9% probability of a rate cut in March, a 5.6% probability of 2 rate cuts by March, and 20.4% chance that we continue to stay paused with no rate cut at all. And markets are now back to pricing in 7 rate cuts for 2024. The odds of this at 38.6%. Yesterday, the odds were 32.5%, and 1 week ago, the odds were 17.4%. The odds of 8 rate cuts now sits at 16.4%. 1 week ago, the odds were 1.3%. I mean, 7 or 8 rate cuts sounds fantastic as long as inflation is falling, and that's the reason for 7 or 8 rate cuts. If the economy weakens and gets worse from here, that's not going to be great. If that's the reason why the Fed's cutting rates. Ever since the CPI report that came out yesterday, you have seen the markets starting to aggressively price in more rate cuts. And the CPI report came in on the hot side. So it looks like the markets are actually pricing in these rate cuts due to recessionary fears, due to fears of the economy slowing down. We don't know exactly why, though, because the data really hasn't supported that 7 or 8 rate cut thesis. But under the surface, bond investors, they're panicking. They're fearful. This is a big risk right now for our markets because the bond market is 2 to 5 times larger than the stock market at any given time. The bond market tends to be correct over the stock market like 99% of the time. So bonds are saying a totally different thing than what stocks are saying right now. We'll discuss it more at 8:30 p.m. tonight. You don't want to miss that. 90 counterparties take $603 billion at the Fed reverse repo operation. Fed President Lori Logan said over this past weekend, last Saturday, that the Fed should stop or slow down the pace in which they're running off their balance sheet. That is because the reverse repurchase agreement market, the reverse repo market, starting to wind down. So those 70 participants are banks. That is their excess capital that they are parking with the Fed. When that runs out, they can no longer participate. So you have went from $2.5 trillion, even in April of 2023, now down to $600 billion. You are going to get quantitative easing or less quantitative tightening some point here in the next couple of months. That will be a bullish tailwind for stocks. Currently, the Fed is adding about $90 billion a month in restriction to the economy via running off their balance sheet. If that turns into 20, 30 billion, or maybe less than that, maybe 10 billion, a month? Well, that's going to be a big positive for our markets. And the U.S. deficit has now topped $500 billion in the first quarter of fiscal year 2024. Citigroup says they are cutting 10% of their workforce in CEO Jane Fraser's corporate overhaul. JP Morgan Chase profit falls after $2.9 billion fee from regional bank rescue. Citibank, Bank of America, all of your large banks got hit with a fee due to the banking crisis. So the bank earnings were not great on face value because of some of these fees. But without these fees, the banks would have posted some pretty impressive earnings. So that's why bank stocks are actually higher today. This is, believe it or not, a good sign for our markets heading into, well, big tech earnings. Because let's be honest, the S&P 500 and the NASDAQ basically are trading at all-time highs. If you see bad earnings, well, that means valuations are way higher than what we think, and that could spark a major sell-off in stocks. Not a small sell-off, but a huge sell-off. That would mean analysts would have to go back and revise their estimates for 2024. Thus, maybe we think the S&P is at a 20 times PE, but if earnings fall through the floor in the first quarter or throughout 2024, maybe the S&P is at a 30 times multiple. People are not going to want to pay a 30 times multiple for the S&P 500. Right now, the magical number is 11% earnings growth in the S&P 500. If that comes up shy in Q1, well, there you have it. You will see stocks fall. It appears as if more tanker companies are temporarily halting traffic towards the Red Sea after U.S. airstrikes on the Houthis. We reported this last night. The Houthis basically say the U.S. and the U.K. are going to pay a heavy price for this. Who knows what that means? But it does likely mean higher shipping costs for longer. As you can see, containerized freight shipping, well, is up big time ever since this Red Sea debacle has started. Now that the US is involved, this either gets better quickly or it gets worse quickly. This is actually something that is helping to push Tesla stock lower. It was reported late Thursday that Giga Berlin will shut down from January 29th through February 11th due to the conflict in the Red Sea. So the longer this takes to settle itself out and to see shipping go back to normal, well, the worse off it's going to be for companies and for inflationary pressures. Volvo has also joined Tesla in halting EV production due to these Red Sea attacks. This is actually a major problem. We did actually receive some very good news today with PPI. Now, CPI is Consumer Price Index. Think of it as Consumer Price Inflation. PPI is Producer Price Index. Think of it as Producer Price Inflation. Well, this actually surprised pretty big to the downside. You actually came in month over month at negative 0.1%. The estimate was positive 0.1%. Core PPI month over month was expected at 0.2%. That came in at 0%. Year over year core came in at 1.8%. The estimate was 1.9%. PPI excluding food, energy, and trade came in about in line with expectations at 0.2, and year over year came in at 2.5. But the number that really matters, that PPI month over month, was a big surprise to the downside. Now, what does this mean? Well, usually PPI is a leading indicator to CPI. If PPI is now negative, odds are CPI is not going to have pressures, at least from companies' input costs rising. Right? Companies are not going to need to raise prices in, abundance because their prices are rising. So this is a good sign that CPI could come in lighter over the next couple of months. This is why stocks initially took off in pre-market and in the beginning of trading. And, well, you can see that has, winded down a bit. Tesla's option activity pretty dang strong today. You have seen 785 orders totaling $1.84 billion with a positive order value of 68%. This option activity is from hedge funds and institutions, not from retail investors. So at 8:30 tonight, we will have the final numbers, but judging off of right now, you could see a $4 or $5 billion day for hedge fund and institutional option activity, and it is very positive. So what is this saying? Well, this is saying even though Tesla stock is falling, hedge funds and institutions are getting some leveraged bullish positions in Tesla stock. That could be because maybe we're expecting positive news coming on January 24th. Maybe margins have improved more than people expected. Maybe we just get a good earnings call. For one reason or another, hedge funds and institutions are bullish on Tesla's stock today. Believe that or not. If you take a look at the volume here to the call side, you got about 53%. Volume to the put side of 47%. The short position in Tesla has recently jumped. Tesla's stock is now 3.22% sold short. And you do have $20.23 billion worth of short positions in Tesla. This is the highest out of any other stock in the market. Global inventory numbers for Tesla, while the Model Y staying pretty much unchanged, the Model X fell a little bit, starting to recover. The Model S continues to fall, and the Model 3 is really showing no change at all, still at multi-year lows. Google trend activity for the Tesla lineup, besides the Model 3, continues to fall. The Model 3, though, is rising. This is likely because all of the search activity in the US because of the new upgraded Model 3 that just hit the markets about 2 days ago. The percentage of stocks above their 50-day moving average is basically flat today at 71.5%. This is lower than where you were during the highs in July, considering the S&P is at all-time highs. What this is really showing you is money is just being, again, concentrated in your big tech names, whereas your other stocks are, well, actually not doing so well. 10-year Treasury yields today down about 2 basis points, now at 3.95%. Even though 10-year Treasury yields have been falling over the past couple of days, it's really not giving a boost to interest rate sensitive names. Another reason why I think the markets are more so pricing in a recession right now rather than a soft landing. I mean, it's pretty obvious. Interest rate sensitive names selling off, 10-year Treasury yields falling at the same time. The market's pricing in more rate cuts with higher inflation reports. That's all indicative of pricing in a hard landing. Hopefully that's not what ultimately happens, because if that's the case, Tesla's not going to do well in all of 2024. The buying opportunity could be around for a long time. We'll go over all of that, my opinions, how things are changing in Tesla stock here in the next video at 8:30 p.m. tonight. The 10 and 2-year yield curve inversion is continuing to uninvert. You're only inverted now 28 basis points starting off in December, on December 15th, 2023, you were inverted 53 basis points. So you've uninverted like 50% of where you were in about a month. Typically, that causes stocks to fall, at least what we've seen in recent periods of time, because when you're negative, well, usually you don't head into a recession when you're negative on the yield curve inversion. When you go positive is, well, typically when you have recession problems. The Fed Rate Monitor tool is estimating Q4 GDP at 2.2%. So as of right now, well, a recession is far off the radar. Tesla stock on the charts has an RSI of 31.56. Anything under 30 is severely oversold. So you're basically severely oversold today on Tesla stock. You've only been green 1 out of 11 days. So it's been pretty bad. Okay, let's be honest. We'll talk about all of this in the next video at 8:30 p.m. What I'm expecting now for Tesla stock. How Tesla could actually fall a lot more from here. We're not in a favorable position. This price cut in China really set Tesla back quite a bit. If the markets get weak from here, it could get ugly for Tesla, and it could get ugly quickly. Now, your MACD is also looking pretty rough, starting to curl down big time. Let me know what you think about all of this information down below in the comment section. Hit the like button, as well as subscribe to the channel. If you guys want to come trade with us live in real time, check out that link down below in the description of this video. We are hoping for a successful 2024 like we had in 2023. That was a great place to be. 2024 should be great as well. It is going to be a lot more volatile, though, than 2023. I will tell you that right from the start. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.